So in many ways, we are positioning ourselves as a yield and a growth story. We want to make sure that we continue to reward our patient shareholders with a very healthy cash yield.
So back to what I was saying. Could be us.
Hi everyone, welcome to another episode of the Beansprout Podcast, where we break down what really matters to investors. Today we are very excited to have with us the Group CFO of Singtel, Mr. Arthur Lang. And with him, I've got Theng, who will join in today's conversation. I'm sure Singtel doesn't require much introduction for us investors in Singapore. It is a household name, but more importantly, we want to understand how the company is evolving and how the company is balancing between growth as well as dividend. Theng is a generational investor in Singtel. She was recently in our Money Diary series, and if you've read the series, you have known that she is actually looking to grow her dividend portfolio to be able to retire early. So we hope to have a very fruitful discussion. Whether you are new to Singtel or a long-term shareholder, we hope to be able to share some of the recent developments with you as a viewer. Arthur, you just released your recent results. I see that the share price has gone up to close to $4. When I was reading the Beansprout Telegram group recently, some shareholders who bought the shares before $3 were actually celebrating your recent results. So how do you feel about it?
Well, I must say I feel very happy, because, it's finally we're delivering for our shareholders. And for us, and for me personally, when I talk about shareholders, yes, you have all the big funds and the big institutional investors, but, sometimes it's the people whom you meet during the AGMs, right? Who hold shares with Singtel, generational investors, as you all talked about, for different generations. And so yes, I think I'm very happy and satisfied. And at the same time, I'm a little nervous, right? Because you know that these things everything starts from zero again in the new year, right? It means you always have new benchmarks to meet and you need to keep up the good work. But I'm confident. I think Singtel is in a good place, and I think the whole team is very focused on making sure we do well for our stakeholders.
Given that we have the opportunity to be understanding more about the results, is there something that you would like to be able to dive deeper into and gain from today's session?
Oh, definitely. Gerald, thanks for having me here. And Arthur, congratulations on
Thank you.
strong set of results.
Thank you.
I've actually noticed that one of the new things that has been initiated for these rounds of results is the share buyback. I think this is really very exciting news for investors like me. As I mentioned, I'm a generational shareholder. My parents were the one who subscribed for the shares all the way back when Singtel IPO in 1993.
That's right.
So I've been basically holding Singtel shares since day one.
Yes.
So definitely, as a long-term investor, I'm happy to see that Singtel is on this growth path, and I'm here to understand a bit more and see how it can add to my portfolio as well.
Thank you. Means a lot. I'm pleased to send my regards to your parents. I think we're very happy, right? Because we want the company to do well, but you also see, that more than just the company is happy. You got all your shareholders that are happy as well. Yeah.
I'm sure behind that actually requires a lot of hard work within your team, coming together of the different business lines. Just looking at the headline level, I see that the underlying profit was up by 9% year on year.
Yes.
Can you maybe share with us what is driving this improvement in profitability?
Sure. I think you are absolutely right. This is definitely a team effort, right? And it requires a lot of the different groups, the different operating companies to really fire up and do well. And this is really part of our ST28 strategy. So as you rightly said, our underlying profits were up 9%, EBIT was up 20%, and it's primarily driven by, I would say, our two main businesses, Optus and NCS. In fact, Optus, if you look, has major turnaround. It was up 55% in EBIT, and NCS was up about 39%. And it's really driven by a very disciplined cost management approach at Optus, and as a result, their margins had improved. I think for NCS, I think they really focus on margins and making sure they do and execute the work well to a very high quality so that the margins will continue to improve. They manage the cost well, and I think most importantly is execution quality, right, which was very high. So and then if you look at our outer opcos like Singapore continues to be challenging. We can talk about it later because of the competition, but they executed well, right? If you look at EBITDA, it was slightly up, EBIT was about flat. And then our digital infrastructure business, which is really Nxera, our data center company, we have already told the market it would be a bit soft this year because of some one-off fees the year before, as well as Nxera, the data center, is in building mode. In fact, we're going to double capacity, but from now till then, we probably have to be spending to construct the data center. But it's good because we are going to complete it probably first quarter of next year, the Tuas data center. We're more than 50% filled already, pre-sold. Yeah, so it's good results overall.
So there's actually quite a lot to unpack there.
Yes.
I think first and foremost, we can look at your overseas businesses.
Okay.
I was doing my research before joining today's session. I understand that 65% of your profit actually comes from overseas business.
Yes, something
And I
like
think
that,
one
yeah.
of the business that you mentioned earlier was Optus.
Yes.
For those of you who are not familiar with Optus, it is the Australian subsidiary.
Yes.
So maybe you can share with us a bit more around what is driving this improvement in profitability for Optus.
Sure. So if you look at Optus, which you rightly said, Gerald, it is our subsidiary there. We own 100% of it. It's the number 2 telco in Australia. I think some of the key reasons why it did very well was, I think number one, the focus was on revenue growth. I think there was a focus on really providing value to their customers, and you see postpaid numbers actually go up. So the industry as well, I think, has become more. There is a bit of market repair returning to the market, meaning there used to be a few years ago a lot of price wars and all that. So that has helped revenues grow. Equally important is really the costs. There were costs that were, what we call the war on waste. It's not just cutting costs for the sake of cutting costs, because there are areas where we need to invest and we need to spend. It is really where is the wastage, where is the doubling up of efforts, where is the overlap? Are there areas, are there businesses or services that we should just stop doing because it's not profitable? So we went through this whole period of shutting down businesses that we say, look, it doesn't make sense for us to do. And I think the other point is also spending CapEx when we can afford it, right? And also on the right areas. So I think it's a combination of many things. And as a result, you see Optus performing in EBIT up 55%, which is great.
Across your multiple overseas businesses,
Yeah.
are there businesses that are doing slightly better, and then are there other businesses that you find a bit more challenges?
If you look at just overall our businesses, right, we have our 4 opcos and our 4 regional associates. If you look at our opcos, I would say Singtel Singapore is the one that is a bit challenging, but also I should be the first to call out, it is one of the largest EBIT contributors to our whole group. I think it's $700-800 million in EBIT. So that's something that is, I would say, very, it's a big contributor. But the reason why Singapore is going through a bit of a challenging period is that we're seeing the price competition in the mobile space, right? In Singapore, we have 4 operators, and we have another group of what we call MVNOs, right? Which I think we have 10 to 12 MVNOs. So as a result of that, you see that the price of data has really dropped, right? Today, there's a kid for 200, 300, 400, gigabytes of data. It's basically a price of a latte, right? Or a bit more expensive, high-end latte, $7, $8, right? These kind of prices, to be frank, are hard to sustain, right? But this is the market that we are in. So what Singtel is doing is really to differentiate ourselves, because our network is, I would say the 5G services that we provide are unique, and they are of better quality in terms of coverage and capacity. At the same time, we provide a very resilient network. So we need to focus on differentiation and not just about price, because once you just play a game on price, I think it's not a good direction to go to. But having said that, we are also leveraging on our 5G capabilities to really think of new businesses and new revenue streams on the enterprise space. You see, Singtel Singapore is not just focused on consumers, not just individuals, all of us. I think that's about 40%, 50% of business. There's another very big portion, which is the enterprise space, which is very big, which is providing services, both connectivity as well as other types of services to big corporates, banks, small and medium enterprises and all that. So we are leveraging on some new 5G type of services to provide these MNCs. and we're starting to see good traction there. So I would say it's challenging, but we are executing quite well. I should talk later about this 5G Plus that we just launched a few weeks ago, but it's all headed in the right direction. If you look outside Singapore, I would say the one associate or business that is quite challenging is our Indonesia business, right? Telkomsel. Again, the contributions of Telkomsel is very large from both a dividend perspective as an income contribution. Every year is $800-900 million, not small. But in the last year, I think we're seeing that on the mobile side, because of price competition, Telkomsel is the number one player, but it's number one by far. Actually, if the 2, 3, and 4 market share combined, still cannot measure up to the number one market player, which is Telkomsel. But as a result of that, you see actually a lot of price competition, and that has eroded our margins and market share of Telkomsel. Having said that, the fixed broadband business, which is the Wi-Fi business, the fixed line business, is doing well. So it's actually picked up. So it kind of compensates a bit, but not enough. So you see actually some softening in the performance at Telkomsel. But we're starting to see some market repair come back to the industry for the past few weeks. We have certain plans, certain strategies that we are executing on with Telkomsel. So we are quite optimistic on the prospects of it. So these are some of the challenges that we're seeing in the business. But overall, I think things are under control.
Maybe if I can take a step back for investors who may not understand how these different businesses overseas actually came about. I think you mentioned that you have stakes in some of these leading businesses in, say, Indonesia, Thailand.
Correct.
How should investors think about your holdings in these different entities, given that they are the leading players in each of these different markets?
Yes. So you're right. We actually own many of these businesses long time ago, decades ago. Sometimes when we first invested, some of these companies were not even telcos. So Globe, which is our number one telco in the Philippines, when we first invested, I think more than 30 years ago, it was not even a telco. It was we invested with our partner, the Ayalas, and then we bid for a license there. It's the same thing with our Indian partner, Sunil Mittal, and that's how Airtel was formed. Telkomsel was a bit different. We're partnered with Telkom, PT Telkom, to look at mobile, and then we acquired the fixed line business last year. And then in Thailand, in the AIS, now our partner is Gulf Development, Kun Saraf, a very prominent businessman in Thailand. In all these situations, I would say the commonality is always finding the right partner in these markets. We, at the end of the day, Singtel, we're big, but only big in Singapore. I'm not half kidding as well. We're a little red dot, right? And we are trying to operate in very large markets like India, Indonesia, Australia. So it is very important to find the right partners. And thankfully, our predecessors, in the leadership team 20, 30 years ago, went in knowing while we are strong telco operators in Singapore, we don't know how to navigate the regional markets. So we found the right partner. And when I say you find the right partner, it's of course partners who share the same vision and objectives as us, but most importantly, the right value system. And I would say all these partners have been first class in terms of really sharing their value system with us. We trust them. The level of trust is very high. I think the most important thing is we've got to trust each other and work through the differences with each other. We always like to say and tell our partners that our mindset and ethos in partnership is you negotiate very hard on a partnership agreement or anything legally, right? Once everything is firmed up, right, you take that document, you lock it up in a drawer, you take the keys and throw away, right? Because then the relationship should be simply on trust, should be simple on commercial terms, and never open up. Because once you open up the shareholders agreement, it means you're ready to sue your partner, right? Which is never the case, right? We should not have that mindset. It should be a mindset of let's build this business from a very small company to the number one telco. And today, every one of them is.
I'll go back into discussing the values and ethos of Singtel later. But before we do that, wanted to go back to looking at your full year results.
Yes.
I understand you have got a few businesses that are identified as growth drivers. You mentioned one of them earlier, which was NCS.
Yes.
I think NCS for me is a business that I always struggle to explain to investors what it actually does. Not too sure about you, Ping Ting, but I find the business a bit difficult to understand.
Okay.
So maybe you can help us understand how do you actually generate revenue in NCS, what has actually helped to drive the growth in NCS.
Okay. So for NCS, I think of it as simply an IT services company that helps other companies implement IT or digital services. Now, during the old days, it's basically everyone, we provide laptops with your company's operating system or your company's website installed, and then we distribute. But that's the old days. It has evolved, right? It has evolved now to, for example, if you have like a customer CRM system, customer relationship management systems, you want to implement how do you store and clean data, right, on your systems. How do you leverage on data analytics to come up with certain analysis? I think NCS, someone like an NCS will be able to do that. NCS, in fact, does with some schools basically AI training, right? Where they actually do working with the teachers to really measure and see individual students and basically using the AI to come up with very tailored and specific tutoring for the individual students. So very targeted, very specific. We also help on security, right? Security issues with the various security agencies. We also help banks, right, to actually come up with their payment systems, implement it for them, or come up with a concept, work with them, come out and working with other vendors, building it, and then actually implementing it. So these are the type of services that NCS provides to our customers, both government as well as non-government customers. Yeah.
So what has actually helped NCS to do better in the past year?
I think it's really the focus on picking the right projects that we are able to execute at a very high quality. What we need to do, or what we are doing now, is to really look at our capabilities and then work with our customers and be very clear, these are our capabilities and we can work on these projects, but maybe not on others. Right? At the same time, we focus on leveraging on the scale that we have to minimize costs. Because sometimes, if once NCS reaches a certain scale, or any company reaches a certain scale, you have cost synergies, right? You have economies of scale. So today, for example, you look at NCS, we have businesses in Singapore, we have Australia, we've got some delivery offices in India, in Hong Kong, in certain parts of China, Vietnam, and recently we formed a joint venture with our telco associate Globe to establish in the Philippines. So that will be another delivery center. So that's how I think overall we are able to bring our cost of delivery down by spreading and scaling up our businesses.
So to sum up, Singtel is not just in the traditional mobile business. Through some of the businesses such as NCS and the next one that we are talking about, which is the data center business, you're actually exposed to some of these growth trends like data analytics.
Yes, correct. That the data analytics, or rather just really leveraging on the digitalization in Asia. So, with all and when I say digitalization, it's not just using social media, right? Of course, that's one aspect of it. But companies today, whether you're the large banks, government agencies, even small and medium enterprises, even you step into the restaurant today, some of your ordering is through menu, right? Online menu, you scan a QR code. All that was digital and all that has data, right? Because if you key in, your people are able to immediately figure out what's the most popular dish, what's the most popular drink, right? And that gives the restaurant owner good insights and good data. So these are all the digital capabilities that companies today are building. And I would say NCS is very well positioned to leverage on this trend. And the other one is data centers, which we can talk about later. Yeah.
Actually, since you have mentioned about NCS and Nxera, as a shareholder, I'm very interested to know. As you're aware, at least from my understanding, is that Singtel being a telco company, it has that utility base, which with the strong cash flow, which gives us the steady dividend payout, right?
Correct.
And then how do you see NCS and Nxera complementing the growth of Singtel?
Very good question. So you are absolutely right. I think if you look at the telco business, it's a very strong, steady, resilient stream of cash flows that we can generate, right? And now the growth is fairly modest, but we're not talking about double-digit type of growth. We're talking about mid to high single digits type of growth, cash flow growth. Whereas if you look at NCS and Nxera, NCS in particular is not very capex heavy. So you actually do have cash flow, but the growth is, we're talking more in the kind of low teens, mid-teens type of growth at the profit level, right? So that will give us the lift and the growth aspect of it. Then you come to data center, right? Data centers now, we have our data center business, which is called Nxera. It's a very capital intensive business, right? Each data center that you build is a few $100 million, right? And I can talk later how we make ourselves more capital efficient. But once it gets completed, once the data center gets completed, you probably contract out to your customers 5, 7, 10-year contracts. So you got a steady stream of recurring cash flows, right? And that one will grow because it follows the growth of digitalization. So that again will give you your double-digit type of growth. So with Nxera and NCS, we call them the growth engines, right? And then the telco business are our core businesses. So you got a steady stream of cash flows, add on growing stream of cash flow. So in many ways, we are positioning ourselves as a yield and a growth story, right? And to be frank, in the past few years, it was not that easy because we need to continue to invest in our growth engines to give you that growth spurt. We're starting to see that, right? And of course, there's more to be done, but we're starting to see that.
So once again, for those who might not be familiar with your data center business,
Yes.
you mentioned earlier that it is capital intensive.
Yes.
What exactly do you do there? Do you operate the data centers?
Yes.
Do you lease them out? What is it that you do within your data center business?
So we build. That means we get a piece of land, we build the data center, then we operate. So we lease it out to whether it's the hyperscalers or large enterprises, and then we collect rent basically. So we're like a bit like a shopping mall, but for data, right? And so this is what we do. Now it's very capital intensive, as I said earlier, because it's a few $100 million each time, right? And then think about it. We all telcos are also very capital intensive. When we had to build the 5G network, it's a few hundred. In Australia, it's a few $1 billion because it's a very big country. So so what did we do, right? So what we did was we like the data center business. We have the expertise. We have the people who know how to operate a first-class facility. But what we need is to make sure we have a balance in our capital needs. So what we did was we brought in a capital partner in the form of KKR. Now, KKR, as you all know, is a very large, in fact, I think it is the largest private equity or asset manager in the world. And they were looking for a data center platform in Asia. So they were looking for an asset or data center platform in Asia. They didn't have one. They have actually large ones in Europe and US. So there was a lot of talk, and basically after some negotiation, they invested in us. So the investment is an investment up to 20% with an option to go up to 25%. And the total amount that they put in is $1.5 billion, which is really good for us because now, as Nxera, our data center company, expands, every dollar that Nxera needs in terms of equity into the project comes from KKR. So we at Singtel don't need to put a single cent. We still majority own it, right? So this is how we make the capital more efficient and a bit lighter. KKR has been a very value-added partner. Even the deal was only done 2 years ago. Since then, together with them, we've made investments in Thailand, in Malaysia, and Indonesia. We also made an investment into GDC, which is another very large data center company in the form of preferred share and detachable warrants. So it's been a great partnership, and there's a lot more to come. We really want to scale this up very quickly.
As you try to balance between growth and dividend,
Yeah.
one of the things that would really matter is your capital management.
Yes, very important.
So I read that
Yes.
in FY25, you had proceeds of 1.9 billion from your divestments. How do we think about that being something that can be sustained going to the next few years?
Okay, good. You are very right, Gerald, that our capital management strategy and framework is one of the core pillars to our ST28 strategy. Just to revisit, our ST28 strategy is really 2 pillars, right? 2 pillars with one main foundation. The first pillar is really focusing on lifting the business performance. So we talked a lot about all the various businesses, what we can do to really improve profitability there. The other thing that we did, many years ago during the strategic reset is to really sell or shut down all the unprofitable businesses. So all that is gone. So we have lifted the business performance or continue to do so. But to add on, we need to recycle our capital effectively. And the reason is because capital, for various reasons, we need to grow into new businesses. So I talked about the growth engines, right? We need to invest into the growth business. We need to, during the past few years when interest rates were very high, we had to pay down some of the debt to bring down interest rates, our interest costs. And then we return the capital to our shareholders. So yes, you're right. So what we do is, how we were looking at is there are some assets on our balance sheet that could be monetized, either because the valuations of them have really moved up, or they're not generating any income or returns, right? So some examples I can give is in the past, few years, we have raised, from I think in the last 3-4 years, we've raised about 8 billion plus through asset monetizations. We sold down a stake in Airtel, which is our associate. We sold towers in Australia, in Indonesia. We even sold a 49% stake in our headquarters building. So the building is an excellent example. By owning it, it did not generate any income for us, right? We sold a 49% stake. We're redeveloping it, right? So we got cash of over $1 billion. Once it's fully redeveloped, we will occupy that place, but I think it's only about 1/3 of the place, 1/3 of the space. The remaining 2/3, we're going to lease it out, right? And get in recurring income, right? So these are some of the ways that we can make our assets work harder and illuminate the value in our assets. Yes, but you're right. So to the results, we've targeted last year, saying we have a 6 billion target for our capital recycling target, and we gave ourselves a medium-term target. So call it anywhere between 4 years, 5 years. We've raised about 1.9 billion last year. Just last week, we basically sold 1.2% in Airtel. So we raised about $2 billion. So right now, we are more than half in towards that 6 billion target. So this gave us confidence when we announced our results to lift that target up from 6 billion to $9 billion, because we're seeing the opportunity, the universe of recycling opportunities is there. So we decided to increase the pace and the magnitude of that target.
For many of the companies that have sold stakes in their different businesses,
Yeah.
the concern is always that then what's left?
Good question. Yes.
So how do we think about the sustainability of Singtel going forward? Can you continue to keep selling different
Yes.
businesses?
Very good.
And
Yes.
whether can that be something that can keep going on?
Okay, you're absolutely right. We cannot, the short answer is we cannot be selling everything and otherwise really got no business to run, right? But to put things into context, when we sold 1.2% in Airtel last week, right, we still have 28% of Airtel. We are still the largest shareholder of Airtel, right? And that 28% plus is worth $45 billion, right? So we sold 2 billion. It's really just shaving a bit, right? We are still very committed to our associates and India as well. We believe in the long-term story of India. It's 1.4 billion people. It's a population that is growing middle class and getting younger, because you got more babies than deaths, right? So the population is getting younger, which is a younger, which would mean a society that will consume more, which is great for telcos. But it's also a society that will be more digital savvy because of younger. So this is all great for Airtel. So that's why you see Airtel's stock price has moved from like 5 years ago, it was 300-400 rupees. Today is 1,800 rupees, right? So it's really gone up by 4 times, 4 or 5x. So that's why we decided to shave off a bit, but we still remain very committed to Airtel, as well as all the associates that we have. And when I talk about this 8 billion target, it's not just Airtel, right? We have so many other things we consider selling. We still have a few more buildings in Singapore, but in Australia as well. We have infrastructure assets we could consider. Yes, we have stakes in Airtel, in other companies, but so we have a whole kind of portfolio, right, of assets that we could consider monetizing and recycling. But what's very important is to make sure that we recycle, we reinvest. Actually, the most important is reinvesting for growth, right? To find new businesses or adding on into current businesses to generate even higher return. So that we are basically, to be frank now, Gerald and Theng, I'm focused. Yes, we still have another 2-3 years for ST28, but I still need to start thinking about what's beyond 28, right? How do we position Singtel beyond 2028? And if for me, I think it's it's definitely the growth engines that we will continue to reinvest. So we're looking at opportunities in IT services. NCS 2-3 years ago bought into Australia. Data centers, we want to invest more. So we're looking at opportunities.
Talking about that, since we're
Yes.
talking about, just now you mentioned about this KKR strategy with KKR
Yes.
by using other people's money, which is a fantastic
Yes.
strategy.
Yeah.
Is this something that Singtel is looking at on a sustainable basis?
Absolutely, yes. We our capital partnerships, I think, is something that we would want to do more of. But I would say it's probably focused more on capital-intensive industries, right? Where we need capital partners who can. You see, many of these private equity, they are not dividend-driven, right? So for publicly listed companies, imagine if we buy a company that bleeds cash for 4 or 5 years. I think our investors would be very upset with us, right? Whereas KKR, they will look, okay, the 4 or 5 years is okay. But what's important is at the end when they exit, what is the valuation, right? So sometimes data center companies can be like that, right? Because you are in build mode. So you're in build mode for a few years, right? It's all cash just going out. But once it gets completed, the steady stream of cash flows is amazing. I was working in a real estate company before. This is exactly what property development is all about. No different. Data centers is the same thing. So that's when you bring in the right type of partner to suit the needs that you need, right? So that's why we brought in KKR, and we are looking for other partners, as and when that they are available and when we need them. There are also other partners which we talked about in our telcos, which are not private equity partners, but partners who are experts, who are very established in the home markets. These are our telco partners. So Gulf, right, in Thailand, Sunil Mittal in India, the Ayalas in Philippines, and then PT Telkom in Indonesia. These are partners that can help us navigate the local scene. They understand the markets. They know how the local Thais think. They know how the Indonesian consumer behaves, things like that. That's where we need their help, right, and rely on them. Another partner that we have relied on, and it's been a great partnership, is Grab, right? So remember, we went into this digital bank joint venture a few years ago. We're not going to kid ourselves, right? We're not tech. We're not born digital, right? We are trying to be digital. We are 140-year-old company trying to be digital, and we are moving towards that. But Grab is indeed born digital, right? But they saw synergies in our partnership because both had very large ecosystems that we can bring together, and that's where we formed this digital bank JV. And it's not just Singapore, it's Indonesia and Malaysia as well. So it's been a great partnership with Grab. So not only do we have telco partners, we have private equity partners, we have also digital partners like Grab, right? And it's doing well. The digital bank, Singapore is a bit difficult because you've got very fierce competition. Indonesia is doing actually very well. We were well ahead of our business plan, and it's profitable already.
So with the divestment proceeds, I guess one of the things that you can do is to reinvest into new businesses.
Yes.
But the other thing that can actually be done is to pay out more dividends.
Yes.
So with your most recent results, you have a final dividend of 10 cents, adding on to the interim dividend that is 17 cents for the full year.
Yes.
Were you surprised by the dividend payout, Ping Ting?
Okay, I think it's within market expectations. Generally, I feel that investors, at least for me, something we look forward to something about 5, right? Anything above would be a good surprise, especially for I think for utility company like Singtel.
Yes.
I think this is somewhere we will look at. So I think based on the share price, I think I think sort of it has it has moved a bit.
It's moved a bit
ahead of the results announcement.
Correct.
Plus the fact that I think because of the recent tariff tantrums, right, where we call it, the share price, because Singtel being it's like a flight to safety as well.
Yes,
yeah.
correct.
So I think both factors has caused the run before the announcement. But of course, the results are, I think, mostly within expectation, at least within in terms of the dividend payout.
Yes.
So I think this is something very strong. As a shareholder, definitely we look forward to stronger dividends. So that's definitely that is why I guess we are here today just to understand a bit more about Singtel's thought process on that.
Sure. So I'm happy to share. I think you're right. I think investors definitely would like more dividends, and you're right. I think a yield of 4-5% or higher 4 to 5% is the right ballpark that we should be benchmarking ourselves. So you're right, we paid 17 cents total dividend for this fiscal year. 17 cents is slightly above expectations. I think the street consensus was about 16.7. The reason why we paid 17 is because it's a growth of about 13% from last year, which we paid 15 cents. And we want to make sure that we continue to reward our patient shareholders with a very healthy cash yield. You see, if you look at our dividend policy, we split it up into two parts. We have a core dividend and a VRD, the Value Realization Dividend. The core dividend is really driven by operating performance. 70 to 90% of underlying profits will be paid out as a dividend. So as the underlying profit grows, which it has, recently it went up by 9%, we will, even if we stick it to the same ratio, the dividend on an absolute basis will also grow. So this is how we're thinking that this is how we grow sustainably, because what we don't want is if our profits drop and we even pay the higher dividend or maintain it, it means that we are borrowing to pay out a dividend, which is not sustainable based on my past experience. So that's what we are doing. Then we add on what we call the VRD, the Value Realization Dividend, where we have told investors every year we'll pay 3 to 6 cents of VRD. That is equivalent to about $450 to $900 million, 3 to 6 cents, right? So if you see, we just raised $2 billion with Airtel last week. Yeah, that's $2 billion. That can easily, it's just about 12 to 13 cents of potential dividend that we could pay out, which could mean that we could pay VRD, we could last us for another 2 years, right? And the VRD is important because it helps to holistically basically present it to investors. We have promised the investors that the VRD is embedded into our dividend. It's not a special dividend, right? So over the next few years, we do intend to pay our VRD. That's why we said 3 to 6 cents every year for the next probably about 5 years. Now, then you, I think, had a question earlier about the share buyback. Why did we do that, right? So if you look at the dividend policy, first, we want to grow it on a very sustainable basis. There will also come a day, as you have said, that the VRD would stop, right? That day is still quite far away, but we need to plan for 5, 7, and beyond, right? And so what do we need to do to allow for the core dividend to match up such that when the VRD drops, the total dividend remains constant? So what we are doing is definitely improvement in our operations. What we are also doing is growing into new businesses to give us that growth in cash flows. That's why data centers, IT services is very important. The other thing is also to a share buyback. The share buyback that we have announced is $2 billion. If we buy back all the shares at $2 billion and we cancel the shares, your EPS and your DPS actually moves up because your denominator is smaller, right? Because we're canceling the shares. So that helps to also lift up the EPS and DPS, which lifts up the first part, the operating performance. Now, the other part, which is also very important of buyback, I think is a signal to the market. You are absolutely right. With the current situation right now we're seeing in the world, people will focus on dividends, but there will be volatility in the stock price. But the stock will just move. So sometimes the stock price could go through a very difficult period and it comes down. That's when the buyback could actually be used as a kind of providing stability to a very volatile period, right? So I think, investors should look at us as make an assumption on what kind of yield, what kind of dividend we can pay. You can assume that if our model continues this way, we will be able to grow it on a sustainable basis. We have the buyback to actually continue to improve operating performance. And the buyback can also be used as a signal to maintain a certain level of return. So it becomes a safer type of investment.
You alluded to a more volatile environment. Today, there's more uncertainty in the economic outlook.
Yes.
As the CFO, what do you think are the key challenges that Singtel faces?
We are very cognizant of the macro uncertainty and the geopolitical tensions that are going around. Now, I guess in terms of the first order impact on the tariff war, you talk about the tariff tantrum, it doesn't really impact us because we don't trade goods. So the first order impact is very low or even nothing, right? But we are of course watching the second order impact. Second order means if other companies that trade get affected, inflation could come in. It could also mean economic performance or the economy stops growing because people are not investing. People just sentiment is bad, And you could have stagflation, means both stagnation and inflation because of the tariffs. Now, all that then would, of course, impact, because it impacts our customers, which would potentially impact our services, our telco services, connectivity services. And maybe, banks or companies may not use IT services much, may not use data center services as much. So we are watching that, right? So there is, of course, that risk, which we need to factor in. But to be frank, right now, it's so uncertain that it's really hard to put a finger to it. But we have run our own scenarios that and saying, okay, what if the worst case happens? This is what we should do. So this is something, of course, maybe every few weeks or months, we have to keep changing and being flexible. The important thing is to make sure that our business model and our business decision making is very nimble, because things will change. The other thing, of course, that's very important to always have is a rock solid balance sheet. So our balance sheet today, I think our net debt to EBITDA is probably around 1.5 times, very, very healthy. Our interest coverage, despite the high interest rate environment, is at 18 times, which means that every year the interest expense, our cash flows can cover it for 18 years, right? And I think that's a very good position to be in, because our debt providers and our rating agencies still have confidence in us. And that's something we could also kind of rely on in terms of the debt markets. So it's not just debt, but it's also the fact that our capital partners are there, right? So again, as I mentioned earlier, KKR has the commitment to us to fund the growth. We don't have to put a single dollar in until that $1.5 billion is reached. And then on top of that, we've got this capital recycling model that has proven to be very effective. So if really we need liquidity, for example, right? Although it's not an issue, we could also tap from this pool, right? So the important thing is whenever this company has to be beyond doubt, even if we go through a very difficult environment, we can rely on different pools of capital, right? I think that's what we want to be.
One of the challenges you mentioned earlier was also the competition in the Singapore market.
Yes.
So maybe I can just revisit that. How do we see that resolving itself? Is Singtel actually doing anything to be able to improve the performance in Singapore? Or must we actually wait till there's consolidation in the industry?
Okay. Well, first, for consolidation, of course, one, it is very unlikely for us to be part of this, because given our size, I don't think the regulators would allow us to. So it's something that's beyond our control, right? So the other parties, there's a lot of rumor that they are talking, but we have to wait, right? And so what's happening now is there's a bit of a price war that's happening in the mobile market, particularly in consumer mobile. So you'll see prices keep coming down, right? As I said, sometimes 200-300 gigabyte plans is the cost of one latte, right? Which of course is, as a number one player, the largest market share is affecting us. But what we cannot do is given the quality of the service we provide, of course, one option is to drop prices, but we are not. We are holding it up. We are creating separate brands to target different segments of the market. The more value-conscious ones, we are providing Gomo and Heya, right? It's two brands, but it's with the Singtel network. But how do we differentiate the Singtel brand? So what we have done is just a few weeks ago, we launched what we call 5G+. First of all, in Singapore, it's one of the very few countries in the world that has a 5G standalone network, which is quite unique, which means you can take the 5G network and slice it up into different types of speeds, right? What we also have done was last year, we called upon the IMDA that we will buy the 700 megahertz spectrum, right? Which many years ago, there was an auction, but I think IMDA, for a variety of reasons, basically the operators could not, could call on it once certain conditions are met, and then we buy it. So we bought the 700 megahertz spectrum. We took it on, we flipped the switch, and today, what we have is we've launched 5G+, meaning that if you are a customer on 5G+, a high priority customer, you go to the Lady Gaga concert. You want to have a priority lane. That means it's like in the airport, you got priority lane, like business class lane, right? Where you don't need to join the lines. So you get a 5G uninterrupted, uncongested kind of slice, right? After the concert, everybody gets onto their app to book a Grab or Gojek, right? You are not congested because you have the 5G+, you immediately get your Grab, you can go home, right? Whereas everyone, you see the network congestion and all that. Now, our competitors don't have that because I think they have not bought the 700 megahertz spectrum, and I think we're the first to launch this. So what we are doing is our strategy is a differentiation strategy. Yes, for certain segments of the market, we are pricing it to suit that specific segment, the more value conscious segment. But at the top end, for our high value customers, we're providing something different, a differentiated service. So FX is a risk that we need to watch. We have a predominant amount of our profits, 70+%, that is coming from non-Sing dollar businesses. So in fact, last year you see that we were, I think the FX, the strong Sing dollar, because every other currency depreciated, the strong Sing dollar actually contributed to, I think, about 50 million of losses to us. So that's something we need to watch. So we actually do hedge quite actively any dividend flows that come back to us. So for example, if our Thai associate declares a certain dividend, we will immediately go into the market and hedge it. And then when the dividend is paid a few months later, it's already hedged. So this is how we kind of minimize the FX volatility. So it's been quite challenging in the last 2 or 3 years because the Sing dollar has been very strong.
If I may switch gears a bit and understand more about your leadership style, I think you alluded to some of the values that are important to you earlier, trust between different partners, being able to think about different scenarios and be prepared for them. How has your previous experience in different companies, different roles actually shaped what are the key values to you as a leader in Singtel?
I think, I have quite an interesting career kind of background and history. This is my third job in a third different industry as well. So I started life as a banker for about 16 years, and then I went into real estate, capital land. This was about 6-7 years, and then this is my 8th year in Singtel. So you have banking, you have real estate, you have telco, and it's very funny because every industry I go to, right, in banking, I remember everybody was telling me how the internet, at that time was internet, not just no apps, no digital, but how the internet was going to disrupt banking, right? So everybody talked about internet banking, how it was a burning platform. So I said, okay, yeah, burning platform. Then I went into real estate, right? And Capital Land was largely a shopping mall company. Everyone talked about how e-commerce was going to disrupt the shopping mall business and all that. Banking, you got the burning platform far away, real estate nearer. Telco is literally at your doorstep, right? Because you have all the hyperscalers, all the OTT players. There's a lot of talk about how the threats of telcos and all that. But looking back, basically all three industries, yes, there's always threats to your business models. But I think it's very important for the industry to really think, how do you fight? How do you compete in a different business model, right? Everyone has threats. Everyone has burning platforms, right? And today, AI is a burning platform. Every company, if we ignore AI, I think they're doing it at their own peril, irrespective of what industry you're in, right? So I think that's something I learned. I think an interesting thing as well is, despite the differences in industry, there are many, many commonalities. That made me realize that sometimes bringing in people from different industry or different background and skill set actually does make the management team and the bench strength much stronger, right? Because you think differently and you come from a different background and you have different perspectives on things. And one very important thing that I've learned in all my careers is a lot of my mentors have taken risks on me, right? Taking risks is very important. Sometimes when you're not quite ready, right, they'll push you into the deep end of the pool. When you're not quite ready to swim in the deep end, of course you struggle a bit, but in the end you swim very well, right? And I personally, in my own style today, I do want to take risks on people, on promising individuals, men and women, and sometimes when they're not quite ready, you just push them in the deep end. Of course, you have to guide them, right, and train them. There will be certain times when they'll struggle, but I think over time they will learn, right? And I benefited from it, and I think it's good to also allow our younger generation and take risks on them.
I think this risk topic is something that's very close to heart for a lot of our readers.
Yes.
Because when it comes to investing, a lot of it is understanding your risk appetite, your willingness and ability to take risk.
Yeah.
So how should someone think about this risk awareness? And what are some of the key principles that one can actually apply when thinking about the amount of risk that someone can take, whether is it in terms of work, whether is it in terms of investing, or even identifying someone that you want to be working with?
I think it's important to really figure out, first of all, what are all the risks out there, right? And then it's important to say, okay, what are the risks that you can mitigate, right? And mitigate, and then figure out what is the real risk after the mitigation, right? There are some risks that cannot be mitigated. Then the question one has to ask is, are we ready to take that level of risk? So I think that's something I think that's very important in the decision making. The other aspect is bonus, right? Bonus does not mean rashness, right? Bonus means going in with your eyes wide open, but being very clear how to get to your destination, despite all the barriers and the blockades that you see halfway. And to really minimize sometimes the risk is making sure you have a fantastic team, right? Having great people with you to execute on a very difficult project is a must-have, right? I think that's what I've seen is it's really people at the end of the day. And it's not just people who have the skill set, but people with the right values and attitudes. I think that's very important.
So I think something that we have often shared with our readers is also that not taking any risk is a form of risk as well.
I agree. Yes, I agree. Yes. And it's the same thing. It's not just in investing, in business, when you make business decisions, and also your personal life, right? Sometimes you have to take risks on your career, but again, it's calculated risk, right? Making sure you have the right mitigants, but there's always that level of bonus that you need to have.
So I think we've covered quite a lot in today's session. We have talked about your full year results, where the underlying net profit saw growth. We have talked about your balancing act between growth as well as dividends. We have talked about some of your personal values when it comes to running a business as well. Theng, what are some of your thoughts after today's session?
Yes, been such a great session. Thanks for having me here.
No, thank you. Yes.
And to have after speak face to face on Singtel results. I'm happy to really hear that Singtel has the capital discipline to actually make sure that to ensure the steady dividend payout for shareholders, and then at the same time coming up with growth initiatives, especially with the part about being efficient with capital usage and also utilizing other people's money. I think that gives that ROE uplift that would enhance share price in the long term.
Yes. No, thank you. No, I appreciate. I think it's been a long journey with the whole team, right, at Singtel. But we are looking forward to more exciting things, right, and really appreciate the investor support and the shareholder support that we have. So thank you.
Is there something that you feel is important for shareholders or investors to know about Singtel?
I think Singtel is an ongoing journey, as I've said, right? I think we have made some difficult but bold decisions in the beginning. I think post-COVID, the strategic reset years from 21 to 24, and then from 24 to 28, we've set up the new ST28 plan. So, just bear with us, give us feedback, right, on what we can do. But I know it's a journey, right? And now, rest assured to investors, we're even thinking about what's next after 28. Yeah.
So to round up, we have actually heard from Arthur about some of the key developments over the past year. We also hear about what are some of the plans going ahead. I think we'll all be looking forward to how you intend to further grow the business while managing some of the capital needs. I think in the meantime, the dividend that you have announced, as well as the 2 billion share buyback, will be something that many investors are looking out for. Good. So we'll continue to see how that can continue to support the interest towards Singtel stock.
Well, great. Thank you very much. Theng, thank you for coming as well. It was nice to meet you.
Thank you.
Yeah, thank you.
Thank you.
Thank you.
Thank you for joining us at today's podcast. At Beansprout, we always bring you the latest insights to help you understand what really matters to you as an investor. If you found today's podcast helpful, do like, subscribe, and share with your friends as well as family. Thank you so much for joining us once again.